I forgot to record it. Okay, okay. So that is what the curriculum at all. Now I'm going to give you a little bit of my introduction part. Okay. So guys, I'm a qualified chartered accountant in November 2017, and I have I've also completed my masters, having a rank holder. Okay, and I have also did my BCom in the year 2013 at all, and after that I started my CA along with the masters degree. Okay, and then after completing my CA, I have into the industry. Okay, I have a teaching experience of more than 10 years. Okay, I started teaching from very grassroots level so that students can understand the accounting from very grassroots level, so that they can know that what is the debit and credit itself and how they have come into the accounting itself. So after that, I am into the also in the industry for 5 years. Okay, I have a versatile experience in the banking sector, as well as budgeting, okay, forecasting, analyzing, management reporting, etc. In a company having, I have worked with, you heard about the name HDFC Bank, Infosys, okay, and also India Post Housing Finance Limited. So these are the variation of like a career perspective I have in my life, and now I am in the teaching full-fledged. Before that I have also in the teaching as well as in the job, but I chose teaching as my passion. So I came here and study hard, and I also study right now also. Again, it is not that like everyone has need to learn. Okay, even if the age of 60 you need to learn everything, and you can learn from anywhere, from anyone itself. So that is what my thing. And I think always as a chartered accountant, I believe as a professional, that if you give your 100%, don't let a single penny from your hand, then you can do this a big dream, that is become a chartered accountant. Okay, so that is what the goal of your for your next 5 or let's say 4 years during your CA activities or CA course. And that's all about the courses and about the my thing. And you will going to let know the more thing when you study with us, and we will going to give you more things to know, because other than CA also you get to get a more knowledge of the like world, what is happening, world economics are there. You also get a lot of knowledge from Priyanka ma'am. She is an expert in the law subjects, you know, the law, economics and etc also. And I love to teach, I mainly love to teach accounts. Okay, mathematics, okay guys, and also taxation, costing, as well as financial management. My core areas in accounts, maths, tax and cost. Okay, so we are all as a team, we can do and we can teach any subject. That's not a challenge to us, but the challenge to us is that always we feel that to give the quality education and to give the best education for our students, so that they can reach and they can take the challenge of the examination, challenge in the examination hall, and get it clear at a single time. So that's our challenge for us actually, not for you. Okay, so that is whole. Now this is from my part, and I wanted to hear from you guys one thing, that what made you so to come in the CA profession? What you think to come into this? It's the biggest question. Okay. Mm-hmm. Yeah. Yeah, great, good. Good to know from you guys. Good, good. And you guys, you? Okay. Okay, get down into it. Great, go, not a problem. You will going to understand what is the importance this in your a profession, or sorry, not profession, is your career, because you are into the career, we are into the profession actually. So you can get understand. I am not going to share with any point. You can get realize yourself when you study CA. There's one thing I am going to share with you. It's like CA is what about the big dreamer? You know, there is only 3,80,000 people having a chartered accountant degree in India out of total 144 crores of people. You know that 1.4 billion, correct? So only 3.8 lakhs only. So you cannot, if you do in calculator, the percentage will not come in your calculator. Okay, like 0.0000 like something. So you understand what is the value of it. There is a value, we understand that what you say, but the most important thing is that the love for your career or love for the chartered accountancy, that's what made you become a chartered accountant. That is not that like you come in and do it. You come, love, most love. Your first love is that we love na in our life. We have a lot of loves in our life, correct, other than moms and dad, correct. So you made it first love for you, then you become a chartered accountant, because it's all about the big dream. It's not like a small dream. Okay, you know that what the percentage I told you. So if you love most, you can do that. It's my belief. Okay, you can do that. It is not like that. It's a value. It's more of the value. Like it's a knowledge. The knowledge we get. I am also like you guys. Okay, when I was in the BCom, so I always try for this knowledge. Wherever I get, I also sit it in the science. I am a commerce background student, but I get in the science students with them to understand the maths. So wherever I get the knowledge, I will get it. That's my thinking, my passion, and that's why I'm into the teaching profession also, because I'm into the in the job. Okay, for 5 years, I love that profession. That's why I came here. So it's like a passion, it's like a love, and it's like a dedication. The most important dedication. So if you have anything, I'm going to say, because I'm not going to get a fear into your mind. I just wanted to say that love is what important for you guys. Okay, if you love it, you can do that. That's what important. Chalo. Okay. Okay, so lot of thought process we have shared with each other. Okay, now let's move into the syllabus little bit. Okay, and get you the idea. Okay, the syllabus is getting like a little bit of bigger for you. Okay, like a lot of chapters are being crushed out from the syllabus, but the content of the syllabus become bigger. Okay, earlier it is little bit smaller, but it now bigger. So now what are the syllabus we need to cover it up? I need to just discuss it. Okay, see. I just make it little bit bigger so that you people will understand. See here, guys. And I told you guys, here you are going to get the lot of concept with us. You will get the concept level as well as some of the technicality knowledge. Like you have get some technical knowledge, how this can happen, why this is happen. With respect to certain cases, you also get your knowledge done from this particular foundation level. Okay, so in foundation we have 100 marks paper. Okay, so in 100 marks we have I told you that guys that I have the old pattern. What is the question pattern is that, but in the new pattern I didn't receive the question pattern yet from the institute side. And if you know that there is a 20 marks MCQ coming in your examination. Okay, but it is not like that, little bit easy, but it is like case study basis. Okay, you have given an unseen pattern, you have to find out this and then you have to write it down the answer. Okay, like that. But I didn't know about the exact thing that you in your exam. Okay, when I get, I'll let you know. So the first thing we're going to learn, okay, is very interesting. The basic chapter, I think so you have already done these chapters itself in your class 11, 12 or in BCom itself. Like what is the scope of accounting, what is debit credit, what is a concept, principle, convention, what is called capital revenue expenditure and accounting policies. And other than this, you have to understand also the most important thing is that accounting standard. Okay, it's a basic points are there in case accounting standards and there are framework, but the accounting standard total there are 29 accounting standard which you get to know from CA intermediate level 1. Okay, paper 1 accounting. But here we just only get a glimpse of idea or gist of ideas regarding the accounting standard. So these 6 unit we have in chapter 1. These are the units. Okay, these all are units, 1 by 1 unit under the chapter 1 theoretical framework. And in the second we have some accounting process we need to know, that is called chapter number 2. Here we can understand, it's very easy. What is called journal, what is called ledger, what is called cash book, how cash book prepare, how purchase book, sale book, bill receivable book, return day book, return outer book, etc. This is all in the first unit of accounting process. In the second unit, how to prepare trial balance, we get to know. There are 2 types of method we are going to learn in the class, and the most important and I love most, that is called rectification of errors. The person who has or the students who has the strong base of journal, the chapter will be a small easy chapter for you guys. If you don't know the journal, then nothing will happen in this particular chapter. This is a very good chapter. So rectification of errors was the third unit, okay? And the third unit on the second chapter. And the fourth and the most important is the third chapter is that BRS. I think so. You guys already do it in the class 11, 12. I think so. Correct? In 11 or 12 standard. I think so. If you have remember. So BRS is quite easy. And after this inventory valuation, that is, you may heard about the stocks that a company may have. Even if in your in a grocery shop, you will also heard there is a grocery stocks are there like wheat, rices, pulses, etc. So how to value the inventory we are going to learn in chapter number 4. And in chapter number 5, we have also going to learn how the depreciation and amortization will be charged on the assets. Okay. And 6th is called bill of exchanges. And okay, I am going to give you some sort of idea like regarding the marks distribution itself. So guys, in this particular chapter, okay, in theoretical, you are expecting to get at least 7 to 8 marks, okay, from here, 7 to 8 marks at least, but all are based on MCQ, not on any big question, all are MCQ, okay, 7 to 8 marks maximum, max to max, there is a maximum marks. In accounting process, you will get 5 marks from here, only 5 marks, okay. BRS, you will get 5 marks here. Inventory, you will get 2 or 3 marks maximum. It sometime it may become or may not become, okay, in exam. Depreciation sure shot you get 5 marks. Sure, it is a sure shot chapter. Bill of exchange you will get sure shot 8 marks, okay. Preparation of final accounts. I think so. You guys already done final accounts preparation, correct? How to do trading PL and balance sheet. So this from here you can easily expect 10 marks. At least 10 marks. You can get easily 10 marks. Okay. And single question, you will be asked to prepare trading PL and balance sheet. Okay. And thereafter, NTO, non-profitable organization. From here, you also get a 10 marks. Sure shot 10 marks. Okay. And after this, sir, accounts from incomplete records. This chapter number 9 and this chapter number 8 is having some alternatives. Means either you have to do non-profitable organization or you have to do incomplete records in the examination. Both the chapter comprise only 10 marks. Okay, in the both the chapters. Only 10 marks, yes. So if you do both the chapters, you only cover 10 marks. But anything in come from both the chapter, either it may be alternatives or it may be a direct question. Okay. And the last one is a partnership. From here you can directly get 10 marks question. Sure 10 marks. Okay. And the last and not the least and the most important, and I also love most, that is a company accounts. That is a vaster sense. Okay. Like vast. Here you can at least expect 18 to 20 marks from these 4 units. 18 to 20 marks. Okay. All the portion, I think so. You guys also done issue of shares. How to issue shares, forfeiture. Correct. I think so. Yeah. So, so this is the chapter where we're going to learn this sort of things, and from this May 24 onwards, these two things are not there. Okay. It comes into the new thing as these two. Before that only. No. You have the 4 units. But earlier, okay, it is only 2 chapters. But right now you have to do more. I told you now you have to do more. We have to do everything, guys. Okay. So that's all about the content. I think so. You guys received the book or material, correct? We have 2 modules, module 1 and module 2. Okay, in module 1, this is given what are the topic we need to cover till chapter 7, and the other 4 chapters are covered in the module 2 parts. And from module 2, you can expect, see guys, in this module 2, from this module 2, you can expect at least 40 marks. From this 4th chapter, only 40 marks covered. So if you do it more thoroughly, then you will get 40 marks at least from there. And other 7 chapter comprises 60 marks only. Okay. So that's all about your syllabus and content. Now we are going to directly jump into the first chapter, that is called theoretical framework. Okay. We are going to do theoretical framework accounting process little bit faster. So it's a very easier concept. So you guys get a I just give you a snapshot ideas so that you guys going to get it completed little faster, because we have lot of chapters in coming in practical aspect. Okay. So after these 2 chapters, we are going to directly move into the BRS easy wala chapter. Okay. Then BRS depreciation inventory. Then we are going to start our final accounts. Okay. and bill of exchange we will going to do later, not right now. Okay, so let's start the first chapter, that is called theoretical framework. Okay, so see, I'm going to give you little bit some idea, like interesting ideas. Whenever we do, okay, first of all you need to understand why you are doing the subject accounting. That's the most important question. Always remember, without accounting we are nothing, because everything is measured on a monetary terms. Even if we are in a at the age of 5, you Pranush, na, correct? Yeah, when you are in a at the age of 5, when you went to the shop for buying a one eclairs chocolate, so the shopkeeper tells you, do you have the money, correct? And without the money, the Pranush knows at the age of 5, see, at the age of 5 Pranush knows, if we don't take the money from my father or mother, then I cannot get the chocolate from the shopkeeper. So even a small boy at the age of 5, he knows the accounting, because the money you give for buying the chocolate is accounting. Everything is in transaction. This is called transaction. This is called money. So a small boy also knows the accounting. It's not like that we are study right now. It's from very earlier stage, like 7,000 years ago we had started learning accounting. So accounting always comes in our mind when there is a concept of money. You can also write this. It's a logic or sense. Accounting will comes in our mind always when there is a thought of money comes in. Without money, accounts is nil, zero. There is no value of accounting. If you tell me, sir, can you tell me one thing, sir? Can you come in my birthday party? So I told you, yes, why not? Definitely I come. But there is no monetary involved. I just went to your birthday party and then give you a presentation and then eat and then come back from your birthday party. Okay. So here we didn't have any monetary transaction involved, so that I can say that it's an accounting. I understand. I purchased the birthday like presentation. I give it to you. Everything fine. But in between you and me, there is no accounting. Accounting happens when you something get for some money. So money is the most important topic we need to always get down in the accounting. Without accounting, we are not going to happen anything else. Okay. Now that is what the accounting concept. Now see, in case of accounting, okay, in case of accounting, the first important thing is that in accounting, we says always, sir, first let understand what is happening. First we need to understand that transaction need to be happen, the first thing. Then when the transaction gets happen, then only we are going to know whether this is accounting, part of accounting or not. But until and unless the accounting is not happening, sorry, the transaction is not happening, then the concept of accounting doesn't get birth, correct? Accounting only comes when transaction happens. But when transaction not happen, accounts doesn't come into the picture. And also the transaction should have to be in monetary form. Okay, then it will be called transaction. So as per my knowledge, I bring it out that accounts is nothing but like a post-mortem. When the murder gets done, then the post-mortem gets happened. And then you come to know where the problem it is, and you get the report to the police station and police investigate like that in the as per the post-mortem. So when you do the transaction first, then you understand, sir, what is involved, whether debit or whether credit, whether purchase, whether sale, whether payment made to someone else or received from someone else, like that. After identifying the transaction very properly, then you do accounting in your books of accounts. Got it? Why that is called post-mortem? Accounts is called a post-mortem. We are doing only post-mortem. So every chartered accountant doing post-mortem. Okay, every accountant doing post-mortem, not the pre-mortem. But listen it, pre-mortem done only by the cost accounting. Okay, when you get to know the intermediate level, we are going to deliver it to you that why it is called pre-mortem. But right now, it's all about the post-mortem thing. Okay, accounting. So in accounting, like what we know, accounting we know. I am not going to the definition as per the AICPA. Okay, just simply I am American Institute of Certified Public Accountants. The definition is given, but I am not going through the definition. I am just simply tells you accounting. See, okay, see the accounting. Accounting is what? Accounting is first of all we need to identify the transaction first, whether it is a transaction or not, and then we need to identify with respect to this transaction what is the transaction, like whether it is a purchase or sale or payment. After identifying the transaction, we need to identify what is will be the debit and the credit based on the nominal rule and sorry as based on the golden rule as well as the American rule, correct? After this we need to put it, classify it, record in the ledger, then we need to summarize this under the trial balance, and then we need to analyze it and present to the financial statement, that is called profit and loss account and balance sheet. So that is what called accounting. This is what the simplest procedure of the accounting, but there are a lot of things are coming around and around, but it is a basic and fundamental procedure with respect to the accounting. So what we learn, sir? First of all, we need to do recording, correct? Number second is that what is called, sir, classifying, then sir summarizing, then analyzing, then sir presentation. These are the 5 things. Okay, so then when these 5 things are going to be completed, we can say, sir, it's easily a process of accounting. That is what the accounting is called. Okay, so now if we go to the little bit more, okay, just give me one sec. I open the open book. Yeah. Guys, give me one sec. I just need to into it on this accounting meaning. Open it. Yeah, it has opened, and then yeah. Yeah, see. So in the given case, what is the accounting? See, here it is written. What is the procedure for accounting? See, the first thing is that we need to do recording, correct? We need to do a recording. That is the first thing. After this, sir, we need to do classifying, correct? Like debit credit basis, we need to do classification and do record in the ledger. After this, summarizing. We need to summarize the ledger balances and then put it into the trial balances. So to match it, and then this trial balance will going to help me in preparation of my financial statement, correct? So I am going to directly move into the financial information related to the financial statement. First of all, this analyzing, interpreting and communicating. Come by one. After doing the trial balance, okay, after doing the trial balance, the first thing is that I need to identify the accounts based on the debit and credit balance, and the same will be plotted in the P&L, profit and loss statement. Earlier we need to prepare trading, PL and balance sheet, these 3, but right now after some modification only we do prepare 2 things, P&L statement and you call balance sheet only. Okay, trading is not more there. Okay, only P&L and on the balance sheet only. So after doing the trial balance, what we going to do? We just simply plot the debit credit balance and understand that whether it will go to balance sheet or whether it will go to P&L statement. Then after analyzing the things, we just put the thing in the PL and balance sheet. That is the first step, analyzing. And the second one is interpreting. After plotting all the balances, correct, in the PL and balance sheet, then we are going to find out what? Gross profit, answer, then net profit. If we have profit, then we are going to say, sir, my sale is good, my business was good, I have made some saving in my cost, expenses, I received that sort of income, everything. So then you can say easily that, sir, I have made a very good year of profit. So this profit, we need to go to the balance sheet and then we match the balance sheet and then try to understand that what is my asset position, what is my liability position. And then I can frame a remarks and then write it down, interpretation. My revenue is grown by 12% year on year or quarter on quarter. My asset has been grown, increased to from 450 to 560, like that. So this is called the interpretation. Interpretation means remarks, comment. And the same comment you going to communicate to whom? Management. To whom? Management. Yes, that is called board of directors. And the accounts will be approved by whom? Do you know who is going to approve it? And no. Yes, the auditor. The auditor finally come and give his stamp and make it sign with UDIN and then prove it. Sir, the accounts represent true and fair view of the financial position of the company. That's all. That is what the basic thing that we are learning. Great. That is what all about the first 6 process, like with respect to the general information, with respect to the using of financial information. And we need to communicate to whom, sir? We need to communicate to management. Yes, you can correct, board of director or management, so that they can understand what is my financial position as it right now. That is what is important. Clear? Now, the first thing is that we understand the process, we understand everything. See, here there is some helping hand given by the institute, how you can identification of the transaction and how you can convert those transaction in the accounting process, how you can solve this and how you can do it. First of all, it's the input. We need to understand the event first, okay, the event first, and then we need to measure in financial terms. First, we need to understand the event, whether the event consists of monetary transaction or not. That is the first case. And then if it involves monetary transaction, then we can measure in the financial aspect and then we can record in the books of accounts. Now I'm going to simply give you one example. The example that I given, that with, now suppose if I went to a birthday party and give you the presentation, so it's like an event because there is no such monetary transaction involved, correct? So it's like a pure event. But if I went to your birthday party, I am responsible to like for the catering services, like for the food services, okay? So you, Pranush, will give me some money to me for giving the foods to your like guests, correct? And I am going to serve you the foods, correct? So that is a called pure transaction. If we have the transaction like this, then only we can measure in monetary terms and we can record in the books of accounts. Otherwise, we cannot record it. So that's the first process of input. Number one. Number two. Second is that called recording of transaction in the books of accounts. Okay. So we need to record the transaction after identifying what is a debit, what is a credit, etc. Then after recording the journals, the first thing we always come in mind that journals are, okay. Always remember first is a journal. I am going to little bit move right here so that I can write it down. First, always remember it's a journal, okay. And then we need to put the journals into the ledger. Put the journals into the ledger. Great. And then after this, sir, we need to do the TB. That is called trial balance. Okay. Trial balances. And trial balance somehow matched. If not matched, then there are a lot of consequences there, like suspense account need to be come into the picture. But I am not going to the suspense account. I am just simply say the trial balance one match. You need to take the debit and credit respective accounts and plot the same while you wanted to do the preparation of final accounts. That means PL and balance sheet. So whatever the debit credit balance you have, just go to the PL and balance sheet. You need to plot this and match your final accounts and then present it to the management and get your job done. That is what an accountant do in the company. That is what the accountant do in a company. Great. And after doing everything like input, accounting cycle, everything, what is the output you get? You know na, because if you do lot of efforts, your result will come in your output. So whatever the effort you give with respect to input, identifying the transaction, recording it, journalize it, ledgering it, trial balance, doing preparation, What is the output? Output is the information you receive from the books of accounts. Simple meaning. The information received from the books of accounts. And the books of accounts, the information you are going to share to whom? Sir, different users of the books of accounts. Different user of the books of accounts. Who are them, sir? You told already, board of directors, sir, management. Great. And sir, who? Like partners. If there is a company, so it may be the yeah. So if you have the like partnership firm, so yeah, sure. Yeah, I'm going to come it. Okay, no problem. No problem. I'm going to repeat it. Just a minute. Just a minute. I'm going to repeat it. Just give me a sec. I just switch on my charger a little bit. Huh? Yeah. Okay. See, after preparing the final accounts, correct? After doing the final accounts, the main task is to that, say, when we do the transaction now, what we going to do? Our effort is what? We are doing lot of efforts like doing the practice, taking tuitions from the pyramid, and then preparing ourselves at home, and then giving the examination, correct? So what is the output of you? Output will be reflected in your result, correct? Output should be reflected in your result. That is what important. So like the same way, the accountant gives lot of hard effort to prepare the books of accounts. The result will come when they are going to communicate this to the what can I say, management and other persons. Okay, so the first thing is that we have to prepare the books of accounts properly and get down the information, that is called the interpretation, from the prepared books of accounts, and we should communicate this to the internal user as well as the external user, because it is not like that only the management looking to us. It's like that other stakeholders also look for us. Like you can say, sir, number one, investor. If you have a company like ITC, what is your result? You should have to make public to all the investors, because investor has all the right to know about your company's position, because they are the owner actually, correct? So investor is number one. Number two is the lender. Lender who is giving you the loan or who is providing you the finance is called the lender. So they have all the authority to understand what is your profit position, because if you don't earn the sufficient amount of profit, then how could you be able to repay their loan or EMI amount? Then the next is the supplier. Supplier means from whom you buy the goods. So supplier always wanted to know that whether my customer is sufficient, having the sufficient profit to repay the me. And next is the government agency. Government always look for that whether you earn profit or not, because what is the motto of the government is that to earn tax from you, to earn the tax from you. So that is the main motto of the government. And last is the customers. Customer is what? Customer means like to whom we going to sell the goods. So to whom I am selling the goods, they are interested about the company's situation or position. So they are called the external user. And other than this, who are actually the company's part, like board of directors, managers, or in case of partnership firm, partners, and also the other officers of the company, they are called the internal user, who will going to take care of the financial parts of your company and also looking for the results. Actually, they are the main person. So this is all about the identification of the transaction, the basic fundamentals regarding the communicating information to the user. That's all. Clear, sir? Ekdam. Now let's move on. Now let's say this is an introduction part. Okay, that is what they are giving. So one important concept that every time it's come to the accounting, I'm going to learn it and I should enjoy it. That always remember, always this remember, every, okay, every event, whenever we are going to do the event, every event is not a transaction. Always remember, okay? Every event is not a transaction, but every transaction is an event, because event gives birth to the transaction, but transaction doesn't give the birth to the event, but transaction is a part of the events. When events are in monetary form, it's called transaction. When events are in monetary form, it's called transaction. So that is why all the events are not the transaction, okay, but every transaction is an event. Always remember. Got it? Now see, they have interpreted a lot of things here, meaning of accounting, etc. Okay, we have already done this, understanding purpose. So the little bit definition is given. Accounting is the art of recording, classifying and summarizing in a significant manner in terms of money, transaction and events which are in part at least of a financial character and interpreting the result thereof. It means what? It means, sir, it is nothing but the recording, classifying and summarizing in a significant manner and in terms of money, transactions and event which are in part at least of a financial character and interpreting the result thereof. So always remember, everything in our life or even in any organization should have gone through a certain process. Without process, nothing is happening. It means when you are very like in a company is very small, they are not thinking to go foreign business. Suppose a company is very small company, okay, like 1-2 crore turnovers company, they are not going to think that we are going to do foreign transaction. But when the company gets big, 100 crore, 200 crore, 300 crore, then they are going to think, so we need to do foreign transaction. That is what the fundamental, that is what the thing, that is what the process we always need to follow while we do the accounting. It means you cannot go directly to the trial balance until and unless you completed ledger and journal. Correct? That is what the process we need to always follow. And then next, if we gone through the most part, that is called bookkeeping. Okay, there are a lot of like understanding with respect to the bookkeeping. What is actually called the bookkeeping? See, bookkeeping is nothing but recording of the transactions. Correct? Bookkeeping means, see, the name itself saying something. Okay, book plus keeping. Correct? It means it is not the accounting, it's a different term. Book means you are doing someone books or you are maintaining your books, and keeping, you recording all the transaction on a significant manner. When you do the transaction or recording the transaction in your books in a significant manner, so it is called bookkeeping. You just keeping the record of the transaction in your book. That is what is called bookkeeping. Okay. So procedural aspect of accounting. What is the procedural aspect? On the basis of the above definition, procedure of accounting can be basically divided in two parts. If we going for the different procedural aspect of accounting, it means how the accounting is going to prepare. Okay, that is called procedure. That means how the accounting or like the books of accounting gets prepared. So we need to understand there is a two parts that we have already learned. Number one, sir, it's a generating financial information. Number two is that using the financial information to interpret the same. Now go to the earlier page. We can easily understand here. See, first we need to generate the financial information. It means the transaction. It means that the transaction. So we need to first identify the transaction, then record it, then classify it, then summarizing it. After that, we need to interpret whatever we done in our books of accounts into analyzing, interpreting and communicating to the users, different users, so that they can take the valuable decision for our company or for the organization that is required to be. Correct? So this is what the procedure of doing accounting. That is what written also here. Okay. So come to that evolution of accounting as a social science. Okay. Now I'm just giving you some sort of a glimpse or idea like that. See, in case of social science, what is a social science? Do you have any idea, guys? What is called a social science? Sorry, based on? Okay, you are saying history. Acha. And you? Yeah, you can say like whenever we come to the point of social science, it's like come to as a society. Okay, like whatever we are doing for like for welfare of the society, or whatever we are doing for like development of the wealth of the nation, that's all comes under the social science. Because see, until and unless we do the proper accounting, the a company cannot show himself that he has going to do the good amount of profit. Accounting helps to grow or show a proper record of transaction along with the position of the business to all over the like world, and then one can easily identify whether this company is growing or not. And when a company grows, a particular area grows. When a particular area grows, a particular state grows. And when a particular state grows, a country grows. And when country grows, the world will develop at all. So we need think in such a perspective that if a financial aspect of the society is going to be good, then everything going to be good, because we cannot just hide the fact and make the secret profit our own and then just enjoy the profit our own only. We have to think beyond the own self or selfness also, so that we can give some like help to the society itself. Like see, in the oldest form, okay, accounting aided the stewards of discharge their stewardship function only. Like we are only doing the recording, classifying, summarizing, etc. Not more than that. Only accounting is accounting, not rather than that. But nowadays, the wealthy man employed stewards to manage their property. The stewards in turn render an account periodically of their stewardship, and the stewardship accounting was the root of the financial accounting system. Stewardship accounting means you have asked to do only accounts. You are not asked to understand the scenario of the whole accounting of the world. You are just going to do only CA. You are not going to update GK and other knowledge of the outside the world or outside the country. So it's called stewardship. It means whatever work is given to you, you just only doing that. It's called stewardship. Means only straight things that you are doing so, not other things you're looking for. Okay. So the earlier thing is doing that like that way. Okay. The presently followed system of double entry bookkeeping has been developed by only in the 15th century. However, historians found records of debit and credit during the dated back 12th century. Although double entry system was followed, stewardship accounting served the purpose of businessmen and wealthy person at that time. In most of the countries, stewardship accounting was prevalent till the emergence of the large-scale enterprise in the form of public limited companies. So stewardship accounting definitely followed by a lot of countries, but day by day when the evolution of the double entry system comes, this is gone out. So now I am giving you one small story about this. Okay, then you can also understand about the double entry system. Why it is called double entry? Okay, why? The most important aspect of the accounting is called double entry. Why it is comes here? See, when the what can I say, like when a person gets something steal from your house, the person steal from your house only because to he has run his family, or he has to fulfill his like empty stomach, correct? Because he doesn't have any job. But see, he is doing so steal from your house only. He do so because it is like he cannot do anything else, only without the stealing. So from his perspective, you can think it's a wrong. From your perspective, you can think that is a wrong, because sir, he has stolen something from my house, so it's not good. His mind is guilty, bad. So from your perspective, you are thinking is bad, but think from the other perspective, the person, he is thinking is good. That's why he steal something from your house, correct? So there would be always some dual perspective in your mindset. So now the concept of double entry come into the picture with respect to some concept called benefit. If someone gives a benefit, correct? If someone gives a benefit to you, then he or she would expect something from you, correct or wrong? Correct? If I am going to give you some benefits, then I expect some fees from you. That's all, nothing more than that. So benefit will be defined from the some money. You can say some from money. So in the double entry system, double means dual. One is called giving the benefit and one is called taking the benefit. That is what the two things in the double entry system. That is how the concept of double entry system comes into the picture. One says, sir, I am getting the benefit, and other says, I am giving the benefit. So someone is receiving the benefit, someone is giving the benefit. That is how the concept of double entry system comes into the accounting. Got it? And also you can think, if you guys also like idea with respect to the science knowledge, like physical science, the third law of Newton, what says? Every action has its opposite reaction. It means if the ball goes to hit your bat, then bat definitely hit the ball also to out of the park. Correct? So it means if you expecting something now, you shouldn't think that you are only going to get only. You have to give something, then you can get something. That is how the double entry system evolved in the accounting or emerges in the whole of the world. That is a concept. You can, like, if you give your concept like this flourish story, na, you will get remembered all the life. Okay. So that is what the double entry system we have covered and understand. And in the double entry system, the evolution of debit and credit comes into happen. Okay, in the debit and credit comes into happen in the double entry system. So first of all thing, what is the debit and what is the credit terminology has been come. I am come to the latter part. Rather, first we are going to understand what is the called objective of accounting. Okay, what is our objective in doing accounting? It's pretty simple. See, the first thing is that we do accounting for systematic recording of transaction. The very first thing. What does it mean? Sir, if we don't do the systematic recording of the transaction, let's say like if a transaction happened on today, it's a 21st November. So if the transaction happens today, then we should record it first. It's quite simple and a very basic rule. But see, after 4 days, you do one more transaction and you wrongly do entry the 25th date transaction rather than 21st. You did in the books 25th transaction, then you do the 21st transaction. So what made wrong? You do the transaction in a very bad manner. You do the record the transaction of the last transaction happened and then record the transaction which is happened very earlier. So you are not maintaining the sequence of the or system of the recording of the things. So if we do this now, we cannot get trace out what happened with us. If we wanted to trace out what happened with us, we need to do the recording of the things on a systematic basis, part by part. The first thing comes first, then second part comes last. That is what is called systematic recording of transaction. So what is written, sir? Basic objective of accounting is to systematically record the financial aspect of business transaction, that is bookkeeping. These records transaction are later on classified and summarized logically for the preparation of the financial statement and for their analysis and interpretation. That is what the first thing, that is called objective of accounting. Number 2, ascertainment of result and above record transaction. Ascertainment of result of above recorded transaction. So accountant prepares profit and loss account to know the result of business operations for a particular period of time. If revenue exceeds expenses, then it is said that business is running profitability, but if expense exceeds, then it is called loss. So the very first important thing when you do recording the transaction, identifying the transaction, ledger is out, 12 is done, then the thing is that we need to do the result. We need to get the result. First thing is the result. Without the result, we cannot get. Like the India and Australia match, what happened? The result says like India is a champion team. India plays very well in full like tournament, but what happened? Get lost in the last match. Some like every day is not going to good for you. So whenever we do accounting now, everything says from your result. If you do good result, everyone pays you. If you don't do good result, then don't pay you. Okay, that is what the accounting said. So the result is most important when you record the transaction. After recording the transaction, try to find out that with respect to the transaction, whether I made profit in the year or whether I made any loss for the year. And you need to report this profit and loss to the management and different stakeholder to get their rational decision. Rational decision means they will going to get the decision that whether it is suitable for our company to having this kind of loss, or what are the requirement or what are the steps that we need to be taken so that our profit will increase, or in case of loss so that our loss will decrease, or we made in the profit part. That is what the fundamental and that is what the basic thing with respect to ascertainment of result and above recorded transaction done. After this, sir, we have to understand that what is the financial position of our business. What is the financial position of our business? It means, sir, like every businessman now, definitely they are all interested about the profitability, correct? Businessmen interested in profitability, but other than profitability, they also interested to know how their financial position goes on. Like what is their liability stands on right now, what is the asset position they have, whether they have good amount of asset to like cover all the outside liabilities. So they need to think whether the profitability, along with the profitability, what is my financial position right now. If the financial position is good for the company, it is good. If it is bad for the company, it is bad. So we need to think first the result, what is my result. Then you also need to think the what is my asset and liabilities position, and with respect to the assets and liabilities we can take it out. Like I am giving you example. Do you know the case of Byju's? Right now there is a case ongoing on Byju's. If you study in the Google, so there is a lot of problems. And like Byju's is one of the top 8 tech company, education technology company in the world itself, one of the toppest. Okay, in during the period of 1917, 18, 19. Okay, 2000. So what happened to them? They are very irregular in preparing their books of accounts. Do you know why? Because they have taken a lot of loans, okay, lot of loans from their investors, but they are not going to repay it. They didn't repay it. They told them we are going to repay it, but they ended up loss because the courses they are selling is very high cost. See why a class 11 students will take 20,000 accounting course? No, not interested. If you are doing CA or CA is fine, it's a professional course. But if it's 11 to it's a very basic course. It can be charged maximum to maximum 5 to 6,000, not more than that. Due to their business model, they are fetching the huge losses for which they are running into the blood of loss. They are running into the blood of loss. So what happened? The company goes into very bad position. Right now, today I received some news that there is some irregularity happened of rupees 9,000 crores in the Byju's, for which ED Sumans, ED means economic director, who has the superpower, like supreme power to questioning any fraud relating to the accounting. Correct. So see, 2021 balance sheet of 31st March 2021 balance sheet, Byju's still not submitted to the MCA, Ministry of Corporate Affairs. So think it is 23rd. Correct. So it means you have already elapsed 2 years. Why you are not submitting? Something you are in your mind, something bad is happening. That's why you are not submitting now. Because if you submit, then everything is opened out. That's why you are not submitting. That is what the story of the Byju's. If you guys read this in the Google, you can also understand what is the story behind that. So if you don't see why this is so important, doing the accounting. You guys tell me, sir, why they are doing accounting? They are expending a lot of money. A chartered accountant gets or cost accountant gets 1 lakh rupees of package to maintain the accounts of ITC company. Like it is not the one chartered accountant maintained. It is like that lot of chartered accountant maintain the books of accounts of ITC, for which they give them salary like 20 lakhs, 25 lakhs in a year package C. So why? Because to understand the accounting is not like that only debit and credit. It's like that you need to understand the perspective of the transaction, and you need to understand the implication of the transaction. If I not record, or if I record, then what will going to happen in future. So everything, like we need to understand accounting standard, we need to understand the taxation standard, like tax and cost accounting standard, to record everything in our books. So accounting is called post-mortem. Everything happens, like cost happens, law happens. After that, you doing the post-mortem and then record. So that is why accounting job is a huge loaded job. Okay, it's a huge loaded job. It means you taking the load of law, you taking the load of own accounting standard, you taking the load of costing, you taking the load of tax burden also. Because if you show high profit, your boss will say, why you show high profit? I have to pay a high tax na. So reduce it. So see what is the pressure of an accountant? He has to show the less profit. So he needs to do some adjustment in the books of accounts by manipulating the some expenditure, by increasing some expenditure which you don't have any voucher. You know how to increase the expenditure. You can show as a cash expenditure like that. You don't have the voucher because in cash expenditure you don't need the voucher. So you just show the cash expenditure in the books and increasing the cost and reducing your profit. So it's called manipulation. So this is the like way of accounting. Okay. So don't give it in your mind. Okay, it will come later. Okay, because I'm not telling of any manipulation word. Okay, it's a wrong word actually. So the thing is that accounting is a boss of everything. I can say it's my perspective. Okay, you have to think everything before doing accounting. So the financial position, financial result is all we have to do before doing the everything. So when you do the accounting, the thing is the results and the position is most important to a company. Okay, and then the most important, you cannot just sit around with the loss. If you have the loss in your company, you need to record it immediately to whom? You need to record it deliver it the same to the your boss or your management. The first and foremost important thing. Okay, and then to know the solvency position. Then to know the solvency position. Correct. What happened? I'm asking something. Yeah, yeah, great, good. Any problem you can let us know. Okay, no problem at all. Yeah, my photo. Yeah, actually I'm writing now. That's why I have already shown them, but I'm writing. That's why. So it will take a little bit space. Okay, so that's why. So if you face any problem, let me know. Like everything is going to be like like tell. Okay, if you have any doubt, yeah. Okay, okay, yeah, yeah. Okay, okay, okay. Sure, sure, sure. Yeah. Ah, I understand. If you don't understand, then I can understand. I have that much of experience to understand that who is understanding or not. Okay. So if you feel anything, and I told you now, guys, it's all about your efforts. If you don't ask me, then how could you be able to reach that level that you wanted to know to be in CA? So you have to ask me. Any problem, ma'am is there, I am there. So any problem, ask me. We're going to solve it. That's what important. Okay. So chalo, let's see. Now we are in the position of the fourth point. Okay, fourth point is that providing information to the user of rational decision making. It means we need to provide the information to the user. User means we know that sir board of director, we know that sir there is a supplier, government. So if we submit the information properly to the user like board of director, partner or manager, officer, they can take the proper decision whether we need to do something else new, so to make our company to that particular level or not. That is what their importance, that is what the important with respect to the information. And believe me, information is everything in this world. Without information everything silent. Information सब कुछ होता है, ठीक है. And the last point is that to know the solvency position. Solvency means you can write in your book. Okay, solvency means your liquidity position, guys. Liquidity, it means whether you have the sufficient amount of liquidity in hand. What is called liquidity? It's called the cash position. It's called basically the cash position. Not only the cash position, you have also debtor, you have also inventory. Liquid means everything like cash, debtor and inventory. You can write also, because liquidity, okay, because liquidity is the portion, is a part which can company convert very easily to get it into liquid form. So if you have the debtor, if you have the debtor, if you have the inventory, you can sell it, that inventory, to the market and get the cash. And if you have the debtor, you can ask your debtor, please repay your money. Please, I have sold you the goods now. Please repay the money. So it can be easily converted into liquidity. And if you have the stock, like say shopkeeper, if shopkeeper unable to sell the biscuits, tiger biscuits packet in a today, then definitely he will try to sell it in tomorrow to get the money. So that's why inventory, debtor and cash are the most liquid position for the company. And if you have this much of strong thing, you can say that your liquid position is very good. You are in a very solvency position. But please remember, it is not like that. You have high level of stock, you have very high level of debtor, and you say, sir, my what can I say? Solvency position is good. You have very high level of debtor, Sunday debtor, and you have very high level of stock in your hand, and you say, sir, my position is very good. No, your position is very good when your stock is going to sell on relevant, like frequently basis, everyday basis, or like 2-3 days basis, and your debtor is pay you your money on timely basis. It means that you have 1 crore rupees of debtor, and you say everyone with your voice, I have a very good position, I have 1 crore debtor, I am going to receive it, I will enjoy 1 crore money. No, 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 it's not possible. Somehow, let's say Pranush, and what's your name? I forgot. No, no, not Pranush. Yeah, your Ibag, na? Yeah. So you say, sir, 50,000 rupees of money. Okay, 50 lakhs, sorry. He says, sir, I have a family problem. So I'm not going to give you the 50 lakh rupees of money. So see, I am going to be mad. I am going to be mad with my hand in my mind. Because 50 lakh is a huge money, almost 50% of the money that I am going to recover from the debtor. So if he tells me that, sir, I am not going to be able to repay your money, what happened, do you know? I am going to be mad, simply mad. If remaining 50 lakh is there, see, out of 1 crore, he says, sir, 50 lakh I am not going to pay you right now, after a certain point of time, then I think that it's gone. It's gone, sir. Yeah, bad date. But what happened? For the remaining 50 lakh, Pranush comes and Pranush says, sir, I have also family problem, I am not going to give you 10 lakh rupees. Then I am going to imprisonment, like jail. In mad jail, correct. I am going to be mad fully because I have no option. I have this much of 1 crore money through which I can do the business. I am expecting that the money can be received from both of you guys. But if both of you guys get me dumped. So what happened? This much of money I am not received. Then I cannot say that if I have good amount of debtor and good amount of inventory hand, then my liquid position is good. No. Until and unless it gets recovered, you cannot say my liquid position is good. Until and unless these things are not converted into bank or cash, we cannot say my liquid position is good. So liquidity is what defines you. If you have the cash, you can do everything. If you don't have the cash, you can face some lot of challenges and problems. That is what the company always give the importance with respect to the solvency position, cash position. That is why, do you know, when you are going to study Companies Act, as per section 2 clause 40, there is a very important statement, financial statement, that every company prepare, other than little like small companies, 1% company, other than this, which is known cash flow statement. They are preparing cash flow statement. Through cash flow statement, they can easily get to know that what is my cash position from different sort of business activity. That is what important with respect to the cash position. That is why cash flow statement prepared by the companies. Okay. So this is what the 5 objectives we have learned. Clear cut, sir. Next. Sure. Yeah. Huh. Both. Both. Yeah. Because see, if you have the cash at bank, you can withdraw the money at any point of time. In today's world, you can transfer the money to anyone because the NEFT and RTGS facility or IMPS facility or Google Pay itself. And if you have the cash, it's also in liquid. So both cash in hand, cash at bank, both are the most liquidable position in your company. Yes, which can be easily liquidated. You can write it down. Which can be easily liquidated. The assets which can be easily liquidated will give you the most liquid position in the company. Example, inventory is more liquid than debtor. Inventory is more liquid than debtor. Because if we have the stock, we can sell at any point of time. But debtor will take some time to repay my money. Okay, so that is why inventory is more liquid than debtor. Done. Any doubt? You? Any doubt? ठीक है ना? चलो. Let's move on to this. So see guys, here is a chart is given by the institute to remember like in a very easiest way, lucid way, so that you can understand. See, they are given the chart with respect to how you can relate with respect to each objective and with respect to the accounting. Systematic recording of transaction related to the bookkeeping, journal, ledger. It's a not ledger, it's a wrong ledger and the trial balance. Okay. And ascertainment of result we can do from trading and profit and loss account and manufacturing account. And financial position, where we need to plot the assets and liabilities, guys, only in the balance sheet. We plot assets and liabilities in the balance sheet, so we can know the position of the business from the balance sheet only. Great. And we need to report or need to give the information to the various user through the reports that we have prepared. Report means what? Report means that this is this one, PL, balance sheet, cash flow statement, CFS. Okay, these are the reports, okay, that we are going to deliver to the management to get their decision, to get them like to help them to make the rational decision. Profit and loss account, balance sheets and cash flow statement. These are the report that an accountant prepared and submit the information along with the report to the management for their decision making purpose. So that is what the scenario of the objective of accounting. Okay. Tell me. Sorry? No, they are not doing profit and loss. They are doing income and expenditure. Yes. Yes. So actually, what happened? The like cash flow mainly, okay, cash flow statement mainly prepared by the public limited companies and the small like private companies, little bit private company, but not all. Okay. But in case of Section 8 company, charitable company or NGOs or comes under Section 8 company as per the Companies Act. Okay. So they are mainly preparing the P&L statement, sorry, income and expenditure and receipt payment. Okay. They are not preparing cash book. They prepare receipt payment account. Okay. When you do the NPO, we are going to learn it. They are going to prepare receipt payment, income expenditure and balance sheets mainly. Okay. So this is what the objective of accounting we done. Now we need to move. The next topic is that function of accounting. Okay. It's quite easy. What is called the function of accounting? Function of accounting is what? Sir, the main function of accounting are as follows. Number one, sir, measurement. Okay, through accounting, we can easily measure the transaction. We can easily measure the transaction in the sense financial position of the company. So all the transactions should be recorded in the books of accounts. And after recording the same in the books of accounts, we are going to measure how is our performance. How is our performance? Like how much profit we earn, how much asset we have, how much liability we have. So measurement can be done through the accounting, and accounting helps us to do this measurement. Okay. So it is one of the biggest function of the accounting. Number one, forecasting. Forecasting means suppose if you have 20,000 rupees of profit in today. So with the help of all the transaction and after analyzing all the transaction, you can say na to me, sir, if we have the 20,000 rupees of profit, can we have the profit of more than 20,000 in the next financial year? Can you say yes, sir? Because you know the transaction very well, pretty well. So if you know all the transaction pretty well in today, then you can easily be identify what will be my future course of action. What will be my future course of action? That is what fundamental important. That is what very important for us. So if we going to know that what is my future course of action, then we can easily do it with respect to the today itself. So today, if we know my 20,000 profit, then we can get the amount of future profit by predicting something. like that. It's called probability. You're thinking your mind. If I got to 10,000 profit, then I can target for 30,000 profit in the next year. So it is called forecasting. But forecasting only you can do if you have the sufficient things in your hand with respect to the current year profit or loss, everything. If you don't have the current year data, how could you do the analysis for the future? It is not possible now. You cannot do a random. You can do a very judgmental and logical basis. You have to understand how my sale will grow. Before sale, you need to go to the market and you need to understand if you are a like a seller of, you can say eraser, okay? You are a seller of eraser, correct? So if you are a seller of eraser, before going to sell in the market, you need to do some analysis. Who are your competitor? And in your locality, whether there are offices are there, whether there are schools are there, or colleges are there or not, because eraser are going to sell in the places where we have offices, schools and colleges. Am I correct? Or tuition centers, correct? So you need to make some analysis, and who are the competitor of mine who are selling the eraser at that particular area. So before doing the things, you need to make analysis. This is what is called analysis, and with respect to this analysis, you made some forecasting that I can sell 20,000 of eraser in next year, sure shot. But after making some analysis, so you need to go to the physical analysis as well as some practical analysis based on your data, so that you can get made forecasting of for future data, okay? And if you do the forecasting, then you can understand what is your future performance also from the analysis. So accounting helps to understand the forecasting and to get your future performance to be known very early before it is done in actually. So see, if you don't target to get accounts, let's see guys, I am telling you, if you very hard, if you give the good effort, you will get easily 70 marks. It's my belief. And if you get extraordinary, then more so possible, definitely. But I am always say 70 is a very good marks in a CA level, okay? So it's my target, correct guys? And also your target. But see, I am predicting as per your, like today I cannot predict because today you are like new, fresh. When I do, we have some 10, 15, 20 class, then I can easily understand whether you are a person to get a 70 or not. Because I get the idea, na? After giving you sort of question, or like asking you sort of question. So after studying something from you guys, then I could understand that whether you guys score 70 or not. Like the same way with the forecasting, correct? So next is the decision making. So obviously accounting helps in decision making. We have already learned this. Without accounting, we cannot make the proper decision making because we don't know the profit or loss or financial position. Comparison evaluation. Suppose there are two companies we have. Number one, EP and Maggie. You guys also use EP and Maggie like very much time for your food, correct? In a very, like, do you like EP or Maggie? Maggie is not EP, correct? So Maggie is a product for which company? Do you know? Nestle. Yeah. And EP is for which company? ITC. Okay. So I know that 80% people likes Maggie. Okay. So what happened? Do you know? There is a controversy case happened with the Maggie that there's some late fine, like a glass of piece fine in the Maggie when they scratches open the Maggie paper, and then it will happen due to some lot of reason. So Nestle going to the court and win the case. Okay. See, still Maggie is favorite for every child in the home. I believe so. So what happened in the given case? See, if you have the Maggie and the ITC in the comparison, so ITC will always analyze why my EP is not going to be ate by every Indian. Why Maggie? Because Maggie made by what can I say, white flour, correct? Maida, and it's made by EP made by atta. आप लोग जिसको बोलते हो, ठीक है? Like what can I say, like red wheat, like that. Okay. Okay, so like brown wheat आप बोलते हो ना जो brown bread, like that. Okay. So like brown color, like it is color is like little bit brown. Okay, it's called like brown bread type color. Okay. So what happened? The basic difference is that the taste is more happened in Maggie rather than EP. So everyone goes for the taste, but believe me, far better is EP rather than Maggie. Maggie doesn't help you for anything else more in your body rather than protein is more intake in your EP, because EP made of brown bread, brown wheat actually. That's what the important. If you search in Google, you can get the what is the importance of the brown wheat in our body. It's make us a lot of fiber in our body, but like white flour don't make fiber in our body. Okay. So see, before doing this, what you need, so you like ITC or Nestle knows what he like who is my competitor, and based upon the accounting, transaction, sale, market share, story, everything, they made the comparison that EP is not going to be my competitor. Okay, because I have 80% market share in the India, and only 20% is the EP. So there is no such comparison made. But if you go for a simple like normal locality, then you can make the comparison. The accounting helps to know how much sale you generate from the selling of EP product, and the Maggie, how much Nestle is going to sell it. If you compare with respect to the sale value, then you can understand why Maggie is favorite rather than the EP. So accounting helps. Without accounting, how could you know? Whether I am going to ask everyone, sir, why you are eating Maggie? What is the sale? I don't know. I just simply see the balance sheet of whom? Nestle. I will simply see the balance sheet of whom? ITC. And then I can find out from balance sheet and P&L what is the sale they generate from EP and Maggie. And then I can easily compare both of them. I can understand who is the most bigger with respect to the selling of this particular product, Chowmin type product, like that. Clear? Okay. So accounting help us. Without accounting, I don't know now who is the what is the sale value. So it's help us a lot. See here what is written. Accounting assess performance achieved in relation to targets and discloses information regarding accounting policies and contingent liabilities which play an important role in predicting, comparing and evaluating the financial result. And guys, I think so if you guys read it, you can understand other than this little language, contingent liabilities. What is this? We have a separate dedicated chapter with respect to contingent liability and contingent asset. So the contingent liability is that the liability which is going to be happen in future but not today, but you are predicting it. The liability which going to be happen in the future but not today, but you are predicting it may happen. So it is called contingent. Contingent means you can write it probable. You can write contingent is synonyms is probable. Like probable liability may be happen. You know that liability, what is liability? Liability is obligation, okay, which I need to pay someone else. I am going to come this little bit later. So say give you an example. Suppose someone did a case in my name, okay, like I steal 50,000 rupees from his cash box, but until and unless it is proved, I am not going to pay the 50,000 to them. Yeah, I know that I steal the money, okay, I know that, but you know that na, you know that because you are just predicting that I may steal the copy because I am the officer of your company. But I know that I did it. I am the guilty mind, I am the culprit. So until and unless it is proved in the court, you are free from the liability, correct? But think, in your mind, you are already predicting, I made the guilty, so I have to pay this 50,000 money. So in your books, you are showing that 50,000 liability will come if I lose the case, correct? I have to pay 50,000 money if I lose the case, because you know that you are a culprit or you are the guilty. So 50,000 rupees you are saving from very first time, so that when the liability will come, you can easily pay the money and discharge your liability. So contingent liability is rupees 50,000. You are showing in the books, but in not showing in the balance sheet. You are showing under the footnote. You are showing under the footnote that my contingent liability of rupees 50,000 related to the case, the decision case, like that. Okay. So next is the control. What is the control? Control means that with respect to a company, control is very important to run the company much smoother. If you don't have the control regarding the measure of the business, like what are your weakness, what are your strength, what is your opportunity, what is your trade, if you don't understand the SWOT of your business, then how could you understand that your business is going to be good? And if you going through the analysis with respect to the accounting, then you can easily understand that how gonna accounting helps you to get the control over your business. Suppose you have a very lower sale, correct, and suppose you are a very high cost with respect to the rent. Let's say Priyanka ma'am takes this hall, so she has paid lot of rent for this, correct. So now if that much of student comes in, then she faces a lot of loss, correct. So if she has the control over the expense, so she tells the landlord, I am going to I am going to take only one room for my class and other room you can, I am leaving, because she knows that if I am paying 20,000 rupees a rent for this particular a room, if I leave three of rooms, then I could only pay 5,000 rupees, correct. So through accounting you can understand which, through accounting you can understand which gives you more pain. Again I am repeating, through accounting you can understand which gives you more pain, for which you are not doing the profit. So you identify that rent is very high for me, I don't have that much of sufficient student, so to cover the rent, correct. So that's why you leave three rooms and only one room you have, through which you can only pay 5,000. See, earlier you pay 20,000, correct. Now you pay after leaving three rooms to 5,000. So your cost go down 15,000 monthly. So you can save yearly 1,80,000, which will increase your profit, correct. If you today you have 10,000 profit only, next year you have 1,90,000 profit, because your 1,80,000 is saving in the rent. So that is what the control you need, and you only can understand from doing accounting, that what is my gap, what is my problem, what is the area I have the weakness, and which I can find and easily solve it out. That is what the control. And last is that government regulation and taxation. See guys, obviously we have to follow what are the government regulation rules are there, because as a company normally we have to pay 30% of the tax, whatever the income we earn. For loss we need not to pay 1 rupee of tax, but if you have the 1 rupee of profit itself, we have to pay 30 paise of tax. So the tax rate in India is how much for company? Normally, there are a lot of slabs are there, but mainly right now is 30%. So you have to pay 30% tax, but it is only applicable for company, not for you guys. We are individual, you, me, everyone individual. But for a company, like let's say ITC, for ITC the tax is 30%. Whatever the profit they earn, they are straightforward pay 30% tax. Okay, so that is what the function of the accounting. Okay, so bookkeeping we have gone through guys. Okay, you need to just go through it, bookkeeping's part. We have gone through what is the bookkeeping at all. Okay, now we can also write it down. What is the, like if you have the book, both of you guys book na, you both have guys book, you have na, even that. Okay, you also, correct. So always carry book and copy with you, okay, whenever you are in class, so you can mark it very easily. So you can write bookkeeping a little bit marking you can do. Bookkeeping is an activity concerned with the recording of financial data relating to the business operation in a significant and orderly manner. We have discussed. We have to maintain a systematic manner, whatever the transaction we have. It covers procedural aspect, like see procedural aspect means two things: generating financial information and using the financial information. Correct? We remember this. So it's cover procedural aspect of accounting work and embraces record keeping function. Obviously, bookkeeping procedures are governed by the end product, the financial statement. The term financial statement means profit and loss account, balance sheet and cash flow statement, including schedules and notes forming part of accounts. So while we doing the balance sheet, we have to also do a lot of things like cash flow statement. We know that we need to do. Other than this, we have to also form a lot of notes. Notes means, do you know what? Notes means suppose you are doing something. If you give notes that I am doing something because of this and this much reason. So if you provide the proper notes in the accounting, then the user of accounting will get it very easy for them to understand the point. That is what the notes is going relevant. So bookkeeping is also required suitable classification transaction event. You can give it so. And accounting is based on a careful and efficient bookkeeping system. So accounting is based on a careful and efficient bookkeeping of system. Okay. and come to next page little bit. So here it is given what is the distinction between bookkeeping and accounting. So there is an objective of bookkeeping and accounting is very easy. We have to, in the objective part, we have to the complete recording of transaction in the bookkeeping, correct? We have to record all the transaction regarding the bookkeeping, and ascertainment of financial effect on the business. Ascertainment of financial effect on the business. Okay. So that is what the objective of the bookkeeping. We have to record all the transaction in a timely manner and also understand what is the effect of the transaction in our business. We can get it from also the bookkeeping part, because when you do the bookkeeping, all the debit and credit transaction recorded, and from those debit and credit transaction we will get the debit and credit value with respect to assets, liability, expenses, income, etc., and we will get the idea what is the effect of those transactions in our business. Okay, and there is a very basic difference is given. You can also mark it like, I don't think so that this sort of differences are given in the examination hall, but for our sake of knowledge we can also mark it down. Bookkeeping is a process concerned with the recording of transaction. Guys, always remember, bookkeeping only deal with recording of the transaction, but accounting is a whole process concerned with the summarizing of the recorded transaction. It means the analysis work is done by accounting and the recording work done by bookkeeping. Bookkeeping recording the transaction, accounting doing the analysis part. Number 2, it constitutes as a base for accounting. Definitely it's a base for accounting, and it is considered as a language of the business. So guys, in the business, if you wanted to know the profit, loss, financial position, control, everything, it is called the language. Business tells what is my story tells by accounting. But if business tells what is a transaction, it can be said by bookkeeping. So bookkeeping says that we do only recording. It is a basic part, it's a base part. If you don't record the transaction, then you cannot understand anything else. So the very base part is that you need to record the transaction, and the record of transaction comes under the which part? Bookkeeping. So that is why they say base for the accounting or recording of transaction. But accounting is what the language. Through accounting you can get the business language. If you wanted to know, sir, how much profit we made, then I will tell you accounting will help you to know the profit. Accounting will help you to know the assets and liabilities part. Clear? Chalo. And financial statements do not form part of this process, and financial statements are prepared in this process on the basis of bookkeeping records. So financial statements are not concerned, like are not part of the bookkeeping. Like in bookkeeping only we do what? So recording of the transaction. Okay, recording of the transaction. Like we do only the recording of the transaction, means journalize them and recording them. Okay, like ledgering them. Correct. And not more than that. But in accounting, we, after getting the transaction done, we just get the trial balance completed and then plot the trial balance into balance sheet, profit and loss, cash flow statement, etc. So accounting do the main part to know what is my position. It is not on the basis of the booking, but bookkeeping helps accounting to record the debit, credit and other transaction through the trial balance in the P&L, balance sheet and cash flow statement. So without bookkeeping you cannot also predict the accounting. Okay, bookkeeping is help a lot of thing to accounting. Okay, accounting is the father, but the bookkeeping is nothing but the like son, you can say, which will help, son or daughter, which will help to prepare the accounting records or journals. Okay. Acha, managerial decisions cannot be taken with the help of these fact records. So bookkeeping mein you cannot take the decision, you just only recording it. A bank debit to Mr. X, Mr. X debit to sell, like that. It is not going to help in decision making. But after doing accounting, you get to know the profit and loss, you get to know the asset liability position. So which will help the manager to take their rational decision. Okay, that is what the management. There is no subfield of bookkeeping. Obviously we don't have any subfield of bookkeeping, but accounting has a several areas. Okay, like financial accounting, management accounting, cost accounting, correct? So bookkeeping is only the recording of transaction, but in accounting is a very vast term. It can be say management accounting, cost accounting, financial accounting, human resource accounting. We have lot of accounting branches are there. Okay, done. And last thing is that financial position of the business cannot be ascertained through bookkeeping records, but financial position of the business is ascertained on the basis of accounting reports. So financial position we cannot get from bookkeeping, we already done this, but financial position can be done from the accounting records, that is accounting report. That is what the main thing of bookkeeping and accounting. See here the picture, they are depicted. Relationship between the accounting and the bookkeeping can be depicted in the following charts. See, bookkeeping is in the set, it is a set, okay, and up in above it is lying accounting, and on the above it is lying accountancy. The subject we right now is learning now, it's accounting, it's not it's accountancy, it's not accounting. Accountancy is what? Accountancy means everything, like from recording, analyzing, interpreting, everything. Accounting have a certain things to be completed, but accountancy beyond the accounting we have to do. So accountancy is a everything, like big brother, accounting is a small brother, and bookkeeping is a small brother, like that. Okay, if you're going to the relationship, any doubt? You, I think so you can have a doubt, maybe. Can you tell me? Yeah, sure, why not? See, I'm writing, okay, I'm just off it out. Now see, I'm going to little right side. See, it's accountancy, it's accounting, okay. We have understand the bookkeeping very clearly, correct? So bookkeeping is quite natural, that is the only the recording of the transaction, that is not a problem. But in case of accounting, we do everything from recording, analyzing, summarizing, and everything else, correct? Now in case of accountancy, accountancy is what? The subject. Accountancy what is the subject, correct? So now if I am going to give you one example, so now let's see, plot one thing. Sorry guys. See, it is recording, classifying, summarizing, that's all, almost, okay, and analyzing, interpreting, everything, correct? This is all the accounting, and it is comes as a part of the bookkeeping, correct? It is as a part of the bookkeeping, okay? But see, accountancy gives you the idea. See, accountancy, you can say like accounting is a like doing this sort of activities, but accounting, and accounting is a set of practice, guys. It's a set of practice through which you can do this accounting. Accountancy is a set of practice through which you can do accounting. It means accountancy guides you how to do the recording, how to do the classifying, how to do the summarizing, how to do the interpreting. It means suppose you know how to go to the market, but until and unless your father guides you, you cannot go there. So the roadmap your father gives you, it's called guidance, and it is nothing but the accountancy. But when you go to the marketplace and buy something, it's called accounting. So until and unless you follow the practice or you follow the rules, then you cannot do accounting, correct or wrong? So that is why accounting is very first thing. If you don't get the guidelines or the practice or the rules, law, you cannot able to do the accounting. And without the bookkeeping, you also cannot do the accounting. Like it is not like that without bookkeeping you cannot do directly also. But bookkeeping helps you to get easier, convenient for accounting. Bookkeeping record it, accounting analyze it, and accountancy guides you how to analyze it. You can write also. Accountancy is a set of practice. You can write, huh? Accountancy, you can write it down in a theory part. You can please write. Accountancy is a set of practice through which accountancy is a set of practice through which set of practice, or you can say comma principles or procedures through which we do accounting, Very good question, I appreciate you. Good question. Like this, if you don't know anything, ask me. Okay, no problem. Now is it clear? You can easily tell anyone, sir, what is accountancy, accounting and bookkeeping. Okay. Okay, now I am going to come to little bit left. Okay. See. Now, what are the subfield of accounting? Okay. So these are very bit, like I understand there is a little bit of theories part we have. So if you get little bit of idea of the theory part, then we get much more clear. That's why I'm going to give you a lot of theory like things. Okay. The thing is that subfield of accounting. Okay. Subfields of accounting. First of all, we already talks about the financial accounting, correct? Under the financial accounting, we are mainly concerned about the financial aspect of the company. In case of the financial accounting, we are mainly concerned about the financial aspect. You can say aspect, okay? Sorry. Why it is not writing? It's an aspect, okay? Financial aspect of the company. Financial aspect means financial position, like you can say how we are going to interpret the financial statements to the user of the financial statement, and how we are going to prepare our profit and loss, our balance sheet. Okay, these are all comes under the financial accounting. And after this, what is called cost accounting. And now I am come to directly to the 3 point, or the point 3, cost accounting. Cost accounting is actually like it's called a pre-mortem, because through cost accounting you can easily understand what is the cost of a product. Through cost accounting you can easily understand what is the cost of a product, and before selling a product into the market, your first task is to identify the cost of the product, correct? Before selling any product in the market, your first task is to know that. So that is what, even in our daily life we also do that. Before, suppose guys, when you come to the institute for your like taking the admission, first thing you also, after this, you ask, sir, what is the fees, correct? What is the fees, ma'am? So always before doing anything, we always ask for the money or ask for the price or value. Then we, if we see it is like logical, it is good, reasonable, then we can do that. Okay. So cost accounting, that is why I say na, this is a pre-mortem, because we know earlier, or you know, doing something else before that, what is the cost of the things to be happen with me. Then we decide whether we do the things or not. So cost accounting, through cost accounting, if we, let's see, if we get to know that what is the fixed cost of the product, okay, if we get to know what is the fixed cost of the product, what is the packaging cost of the product, what is the advertisement cost of the product, what is the selling cost of the product, then we can easily identify the cost, and with respect to the knowledge of the cost, we can easily decide whether we need to invest or not, whether we need to go for the product or not, whether we need to make the product or not. That is what the fundamental of cost accounting. Okay. Now next is that management accounting. What is called management accounting, guys? It is concerned with internal reporting to the manager of a business unit to discharge the function of stewardship, planning, control, decision making. The management needs variety of information. The different ways of grouping information and preparing reports as desired by managers for discharging their function are referred to as a management accounting. So management accounting, see what? It's very easy. It is a concern with the internal reporting to the managers of a business unit to discharge the function of stewardship, planning, control and decision making. So through a management accounting, you can submit the business report to the management, okay, as well as how to discharge the function relating to the planning, control, their stewardship of what, their decision making, how we can do this, and what are the information that management needs, and these all you can do through the management accounting. These you can do through the management accounting. Accounting means is not like that only the doing the transaction and recording the books, okay, make it very much clear. Accounting doesn't mean only the recording the transaction, get into the books. Accounting means how you present yourself in a proper way to the financial aspects, okay. It means when management gets all the information relating to their aspect, it is called management accounting, like how the planning will go on, how the control will go on, everything. This is what is called management accounting. Done, sir. After this, a very important, okay, component of management accounting is cost accounting, which deals with the cost ascertainment and cost control. Management accounting will be dealt with the higher level of chartered accountancy courses. We'll going to know that what is our with respect to management accounting. It is in your syllabus in the CA final, okay, the management accounting position, not right now, okay, got it now? Very good. Chalo. Now see guys, shall I move? Sure. So after this, guys, I told you human resource accounting. Human resource accounting, it means, okay, human resource accounting, it means very easy. Human resource means, guys, whenever you get hired in a company after becoming a chartered accountant. So guys, the human resource manager, the HR manager will come and identify whether I need 4 chartered accountant, 2 chartered accountant, 3 chartered accountant with respect to the cost of the company. Because company has a budget of 30 lakhs for which they need how much, sir? They need, you can say, sir, 5 chartered accountant, okay. See, 30 lakhs ke budget mein 5 chartered accountant, they will never ever get, okay. They will never ever get, okay, with 30 lakhs. If they have the budget of like 50 lakhs, then they can expect. But 6 lakh mein, there is no chartered accountant will go for the job, okay. It's very minimum package. 50 is not a like huge package, okay, in today's world. So guys, before doing anything, the human resource manager task is to identify how much quantity, sorry, how many quantity or how many number of people we need for our company, number one, okay. Number two, how much package we need to give them. We need to analyze na, before introducing someone, I need to understand how much salary I can give them. That is what the first task. And human resource manager always understand this perspective first. How much investment I need to make to that particular person, how many person I need for that particular job, and how my organization will get the help from these particular human resources, sorry, with these particular human beings. So the whenever you are doing any hiring, okay, human resource manager will do human resource accounting. They first identify what is my like quantity to be hired, what is the investment we need to make in the human resource. And it is not only that hiring. If see guys, if we people need more to learn, we need to go to institute, and institute spend lot of money in us for development of our knowledge, because every day there is a huge changes in the knowledge. Right now there is an era of open AI, correct, artificial intelligence. So you need to learn faster. If you see that in today's world, most of the things are going on online. I'm in the Infosys, I being working in like India from Bangalore, but I in Bangalore like working, but the manager sitting around where? New York. Okay, so they are not, he is not coming, but he is working through online. Everything goes on online mode because the faster. See, when you travel from your home to like coaching institute, then it will take you around 30 minutes, and then you go back. So 30 1 hour will lapse. If you study in your home, it will save you 1 hour. So 1 hour you can take the rest, or you can do some practice. So due to the time management, the concept of online evolve. You can see after like, what can I say, after 5-6 years, everything goes on online, nothing will go on offline, everything. So that is what the era. So human resource accounting always focus on this. They identify first how I can save my cost, how I can do the investment proper for my company. And human resource manager invest the money of the company in the people, not in the any business. They are people, because they hire the people now, like you, me, after becoming chartered accountant, for running the company's accounting. So the human resource, whenever they do any analysis with respect to the person to be hired, how much salary they have to give, it is all comes under human resource accounting. Clear? So the last is the social responsibility accounting. The demand for social responsibility accounting stems into increasing social awareness, because if you don't do social responsibility accounting, you get in a very problematic manner. See, in today's world, every company has to pay 2% of the average last 3 years profit as a corporate social responsibility as per section 135. Okay, they have to submit some, they have to give some money to the company, okay, with respect to this. Because if you don't contribute as a social responsibility to the government, then how government will develop the society? So government asks 2% of the average last 3 years profit with respect to the contribution from the company, so that government can develop the company, develop the country more. Because see, you are a company, you are working, like you are a company, you do business. With respect to business, you earn the money. So if you earn the money, what is your responsibility? You have to give something to the government other than the tax. So government requesting you, please do something for the development of the country. So that is why they are doing so. That is what the basic fundamental. Great. That is what is called social responsibility accounting. These are the very basic fields are there. Okay. And other than this, we have also understand the user of accounting. Guys, we have identify who are the various user of accounting. We have like internal user. There are two types of user. Okay. What is the internal user, external user? Internal user are the user who are into the company. Again, I am repeating. Internal user are the user who are into the company. Like example, we will know that sir, partner, manager, officer, and board of director. We have been clear. Clear. And what the external user, sir? Sir, investor, and then sir, what? Very good. Then sir, yes, supplier, and then government. Done. So these are the external user. So we just need to read this and going to get completed. Okay. So these are